What gets measured gets managed. Today on the Working Cows podcast, my guest is Eric Jasinski, and we're going to talk to him about how we go about managing the complexity that we have on our operation.
Especially on the cow-calf side, the way that your inventory, depending on when you calf, can hit 3 fiscal years of being in your operation at some point. Like, you're juggling a couple different versions of this kind of abstract idea.
We're also going to talk to him about the importance of realism and how we need to decide where are we going to start and not try to do too much from the beginning.
It's a double-edged sword where it's like, if you're not consistent about it, then you kind of end up with just like one group of animals in limbo, and you feel like you did all this work, and then you don't get any of the benefit, which is being able to compare A to B.
We're also going to talk to him about what should we do at a minimum to make sure that we've got enough information.
I'm not trying to make busy work for folks, but like, if you are interested in understanding your enterprise analytics, then you must do that type of stuff.
All that and more on this episode 429 of the Working Cows podcast, brought to you by the South Dakota Grassland Coalition and Ranch Right.
Welcome to the podcast that gives producers a platform to discuss and share paradigm-challenging practices that have increased the effectiveness of their operation and the joy that their families have received from this lifestyle.
Howdy, everybody. It's Clay Connery, host of the Working Cows podcast, recorded exclusively in the Understanding Ag studios. Very excited to be joined today by Eric Jasinski. Eric has a lot of experience actually in greenhouses, and that has set him up, along with his training in economics, to help ranchers think about what are they supposed to be managing and what should they be measuring so that they can manage those things that actually matter. And as part of having Eric join us today on the Working Cows podcast, for my listeners, Ambrook is providing an exclusive link to 1 month free at ambrook.com/workingcows. Give it a try for free for 1 whole month. Cancel anytime, no commitment required, but see if you like it. I'm really excited to share this conversation with you right after a word from our sponsor today, the South Dakota Grassland Coalition. If you're in the business of managing livestock, you've probably experienced drought, shortage of time, not enough help, and hefty debt. But facing one or even all of these challenges doesn't have to leave you worrying about how you'll make it through another year. Learn how to increase stocking rates, extend your grazing season, increase plant diversity, retain moisture in your soil, spend less time and money on weed control, and much more at one of South Dakota Grassland Coalition's grazing schools. During this intensive 3-day program, area producers, along with presenters from state and local agencies, combined hands-on activities in the field with classroom-style presentations to walk you through the steps necessary to create a grazing plan that suits your unique operation. Reserve your spot at one of the 3 grazing schools today at sdgrass.org. Eric, thanks for joining me today on the Working Cows podcast.
Pleasure to be here. Nice to meet you.
Excited for the conversation. Really appreciate the topic. What gets measured gets managed. A lot of times we find ourselves not paying attention to the right things. So what are some of the things that you think are the most important in your experience for ranches to be paying attention to?
I have 2 answers to that. I think there's a bunch of things that ranches say probably measure and manage in some respects, like, feed costs, vet costs, head count, market price, first and foremost, all of those happy things. And so I think there's, the bucket of things that get managed that come back to your taxes some way, shape, or form. I think that there's sort of the thing that maybe gets managed less that I'm, pretty interested in evangelizing anyways, is the measuring things over time, and so I think the thing that people probably aren't managing that they might want to is, income over year, right? Or like by animal group over year. I think that's like a theme of something that we talk about a lot in our day-to-day work is setting up a management system that can handle things. Year over year, comparison points, benchmarks, and just like you want to know how the trend is going in addition to maybe, what you spent yesterday.
Yeah, for sure. talk to me a little bit about how you would go about measuring some of those year-over-year comparisons and some of the key groups or ways to see those relationships.
The thing about it is that most people probably have a lot of the numbers that they need to manage somewhere, whether that's a pen or paper or whether you use some specialized software to keep track of your cows and keep track of your calves and keep track of your breeds and all those things. So I think that a lot of it's just about organizing the stuff you already have into a way that's useful. And so, keeping track of how many cows you had in January of 2025 compared to January of 2024. And then, taking how much money you spent and dividing it by the number of cows that you had to get some normalized sense. And so I think that, it's just really about putting things in a way that can be compared, apples to apples, down the line.
Yeah, for sure. I think that's a big part of it. So maybe back up and talk a little bit about how you have come to understand these things. Like, what is your background? How are you having these businesses to compare, a bunch of different numbers from and say, hey, we're seeing this is a helpful set of numbers to look at. Where are you coming from in that regard?
I personally come from a background working like in greenhouse operations, and so I cut my teeth, in a greenhouse where we had six turns a year. So we were sort of buying supplies at the beginning of the year, running different harvests, and sort of messing around with our recipes, things like that, and coming from a place where where we really weren't measuring anything and trying to like figure out how do you got these lump sum expenses and you're just trying to get to a sense of how much money are we making per turn, as opposed to sort of like what does my tax return say. And so I think I come from a deep place of spreadsheets and confusing formulas and sort of hacky napkin math style stuff before I started working at Ambrook. And then I think that was plants. At Ambrook, we mostly work with livestock producers. Like, over half of our customers are cattle guys. And so finding the comparison points between a little seedling and a calf is actually, not all that complicated. And so we work with a lot of folks that when they come, by the time somebody gets to my door, they're often sort of in a state of seeking change, and so they've been doing something and they have a system that has maybe been getting them through the end of the year, but they're looking to maybe improve. And a lot of the stuff, like when I first meet somebody, I'll talk about what do you track today, and maybe like what are you not getting out of it, and kind of like designing a set of things to track that speak to the business. And so, speak to a cow-calf operation, and they're talking about wanting to track the cost of their replacement heifers and sort of get into this cost of a thing that you don't actually purchase mentality. Or you end up in a feed yard and you're trying to have somebody figure out, is it better to background or go traditional feed, right? And I think that that the answer changes from person to person, but that those are like, that's kind of how we come about it anyways.
What are some things maybe that you see commonly getting measured that maybe shouldn't be getting measured? Do you think that there are some things that people waste time measuring?
In an ideal world, there's nothing that's a wasted sense of measuring. I've had some folks who will really, really want to measure the repairs and maintenance on the different cars that they have. And they just want to know, like, when should I have bought that new engine? And I think that's a great question. I don't know if it's going to improve your cattle operations output, but I think that the right answer to that is when you're not going to measure everything. And so you need to figure out what's important and where you can actually put your energy, and some balls are going to drop, as somebody once put it to me. And so you kind of have to accept that and prioritize a little bit.
Yeah. And I think that kind of back to what you were talking about in relationship to the greenhouse, And you said it's not really that hard to correlate this to cattle, where you've got different classes of livestock, you've got different plants, you've got different crops in the greenhouse, and some of them do better. Some of them take more care and tending to make them thrive. But then they're also a higher margin item on the other end. So livestock can be the same way, right? There are different classes of livestock, some of them more or less needing tended to and more or less profitable, right?
Yeah.
So do you see value, though, in kind of tracking those different groups and say, hey, which one of these is giving us the greatest return for all of the, correlated costs of, our time, that, all these other things that we're putting into them, and then say, okay, this is our highest margin thing. Let's do more of that and then less of these things that are less margin. Is that kind of how you're thinking about it?
Yeah, I think that's right. I think that, I'm definitely not an expert in something like the right breeds, right? Like I'm not going to tell you that this Angus cow, this red Angus, is the right thing for you to be tracking necessarily. And I think people probably have some intuition about that. And it's one of the funny things where it's like, maybe if you go all the way to the end consumer, you think about getting some premiums on different cuts or different inputs. Some guys are just kind of stuck in the commodity side, right? Like you're sort of a price taker. I think a lot of it is actually like the value is actually just being adaptable, right? And so it's like if it's been a really really dry season and you had to feed a lot, maybe you didn't turn as much of a profit as you thought you did one year, right? And the answer is actually that you spent more money on feed, and because it didn't rain, and like maybe the answer is actually that you should get some drought insurance, just as one example, right? And so I think that like you can do a lot of things to produce like higher quality beef at the end of the day, and like you can do some things with your land to make it more resilient to those types of things. I guess like my long-winded way of saying like it's as much about like downside protection or like giving yourself a basis to think about a hard decision, like maybe doing a bigger call than you were thinking about, or like the hard decision of not taking some money to hold on to a couple animals, where the record keeping comes into play the most.
So the record keeping helps with the downside protection, or the record keeping tells you, hey, maybe this drought insurance the downside protection that would be helpful here.
Yeah, it's one of those things that it by itself does not actually solve your problems, but it gives you a framework to actually think about how to do something like make some downside protection, or, more optimistically, or decide that you're leaving money on the table and consider making that positive investment.
I think one of the most helpful ways of thinking about the ranch business is the difference between cash flow and economic profit. Like,
yeah.
Cash flow is money came in, money went out. Economic profit is, are we generating return on the asset? Are with depreciation figured in, with, obviously our time, we should pay ourselves, all these things like that. So how do you distinguish between cash flow and actual profitability in ranch operations?
Yeah, I mean, I think that reminds me that on the topic of something that people are measuring might not be measuring that they should be measuring, like hours in is actually something that people should be measuring. I remember reading this USDA study about how the biggest cost on an economic basis for most cattle operations is actually the opportunity cost of the management's time, right? And like you have to think about your hours as an expense even though you're not outlaying cash. So like that's really just one fact of it. But the example I always give when people ask me about this is like, you're running an operation, you have, I don't know, 50-50 steers, heifers, and one time you decide to keep all the heifers for some reason, and you're just like looking at your income and you lost a ton of money. And then there's things you can do, like there's sort of the notion of accrual basis accounting, which is sort of like often thought of as bills and invoices at a high level. There's also inventory, and like when you think about the things that you don't sell as assets that sort of contribute to your overall economic value, that that turns your profit and loss statement into like a more holistic view, right? So it's not just cash. It's like having more inventory is a form of income in and of itself, whether or not you have a cash tax coming down the line in that way.
Yeah, I actually had a couple one time reach out to me and say, "Hey, because of the drought, we're selling a bunch of cattle, and we like to give 10% of what we bring in every year to the church. Just it's part of our discipline, what we like to do, but we're looking at like that's a big check that came in
Totally.
with the sale of those cattle." And so I kind of walked them through this exercise saying, okay, let's think about it from an inventory value perspective. Like your inventory, your value of your inventory went down by a bunch. And so we can kind of look at it from that perspective. Like on an inventory basis, there isn't an increase to give off based on, from a cash flow perspective, there was, but from an inventory perspective, there wasn't, or there was less of one, than you would think otherwise. And so then just a kind of a different way of looking at it kind of helps understand those things, I think.
Totally. And I think that's the biggest, honestly, the hardest thing for me to wrap my head around coming out of like a greenhouse world is like in a greenhouse world, when you're running 6 turns a year, your inventory, it's small, right? On the overall scale. And I think that especially on the cow-calf side, the way that your inventory, depending on when you calf, can hit 3 fiscal years of being in your operation at some point. Like you're juggling a couple different versions of this kind of abstract idea in your head, and like it's not very easy to just do it, mentally. And so it's one of the reasons that having something written down can be helpful.
Let's take a quick break and hear a word from our sponsor today, Ranch Right. Ever heard the saying, if it was easy, everyone would do it? Well, in the world of ranching, there is nothing easier than hiring Ranch Right. Ranch Right is a full-service bookkeeping business that teaches you how to use your financials as a compass to guide your business to success. Regardless of if your goal is to pay off debt, grow your cow numbers, or hit a certain profit target, Ranch Right helps you set up your business to make ranching easier. So don't get left behind. Visit ranchrightllc.com. What do you think ranchers should do to separate and analyze profitability across different enterprises? I mean, you talk about that. Just within the cow-calf enterprise, you got heifers, you got steers, you got cows, you got young cows, old cows, all these different things. And then on top of that, add in everything else the ranch is doing. They might be making hay, they might be hosting agritourism events, or have a Airbnb, or land trust. Might be giving people an opportunity to come out and take pictures or hunt or whatever. There's just all these different things. So how would you say, let's figure out how to track these things?
Yeah, I mean, I think that like the simplest answer is just kind of work backwards from the money, right? So it's like you have this idea of a profit center. Like there's something that you do to make money, and whether that's agritourism, whether that's just selling calves, like that's one way to initially bucket it. I think I mentioned this a little bit earlier. I think with the cows in particular, or like the calves anyways, like thinking about each group of animals with like a serial date, like a year, I think sort of helps you create like what feels like one enterprise. Like my cow-calf business is actually, an enterprise is almost like a job, right? It's like one little project, which is this group of animals. And each one of those have their own incomes, their own expenses, their own problems. And you can kind of chunk it down that way. So I think that you want to do your best to sort of think about all of the framework that I've often heard for thinking about is something an enterprise is like, if I took this thing out of my life, what would I not be making and what would I not be spending? Like if I didn't run a cow, I would not be paying a vet. I'd probably still have a utility bill, but I wouldn't be paying a vet. And so I think like starting from the money in and working backwards from there is one really helpful way to sort of think about it. With all the operations, then you kind of get into this second set of overhead enterprise, right? So let's say I'm doing 20 different things. Like I said, I probably still have a utility bill. I probably still pay my tax person at the end of the year. And keeping track of those, like, as an independent enterprise, if you want to call it that, like the enterprise of being around, essentially, and spreading that however it makes sense, is always a best practice there. And then the last thing, which we talked about a little bit, is sort of this notion of trying to find all of the non-cash transactions in your life. So my management, that's like part of my overhead cost. The hay example, I get, I grow hay, and maybe that's not, doesn't feel like a profit center because I'm not turning money on it, because I'm actually just giving it to myself, right? And so you have to sort of like, when you think about making money, it's like, am I receiving cash, or am I turning down the opportunity to receive cash because I'm giving it to myself? And so I think, like, the thing about enterprises, and the thing that makes my job rewarding anyways, is like the notion of, you just have to sort of talk it out with somebody and like help figure out what those enterprises may be. And there's definitely common ones, like, the cattle rancher who grows a little hay on the side is probably a lot of folks. And so you can kind of speak in generalizations, but then there's almost always an opportunity to get more specific, because everyone's some custom work on the side, maybe doing a little work with mom and dad who own, like, a couple heads in the herd that you want to just like split out, maybe trying to get your kid a little cattle business early, that type of a deal.
Yeah, for sure. You talked about kind of serial tracking. Is that right? And that being a way to break out different populations within the overall herd and say, here's what the heifer development is costing and the revenue it's generating. Is that how you would approach that?
Yeah, I mean, the way that I heard it initially described to me was thinking about a group of cattle like a make and model of a car. And the idea being that, because we, like we were talking about, the way that it can last multiple fiscal years, it's like, if I have some, heifer development that I'm doing, and I first grouped them off in 2023, and for whatever reason, if they were the ones being developed over a really bad drought or something, that cost is going to be way higher. Like, I wouldn't want to say that my entire heifer development enterprise is underwater because I had a couple heifers coming in a bad year. So you want to, like, be, especially because it's like so seasonal, right? And like there's like, you want a way to basically like time box things to say, this is my enterprise and this was impacted by these seasons, and that's the reason that it made or lost me money, right? And then you want to be able to say, compared to the 25s when it was pouring, I was making a lot of money. So you both have the heifer development, the business, and then you have like the individual serials, runs, makes, models of the heifer development sort of throughout the lifetime of your business.
Yeah. Yep. For sure. That's helpful. What are some challenges people run into when doing enterprise analysis in your experience?
One of the things that it's a double-edged sword, where it's like, I would love people to be tracking 24 heifers, 25 heifers, 26 calves. But if you're not consistent about it, then you kind of end up with just like one group of animals in limbo, and you feel like you did all this work, and then you don't get any of the benefit, which is being able to compare A to B, right? And so I think that designing it basically overcommitting, I think, is the thing that people are into. It's like, you're coming off Christmas, like you're full, you're sort of looking at a new year, you're all like bright-eyed and bushy-tailed, and you're like, I'm going to track the world, like I'm going to know the cost per animal down to the hoof, and then come June, you're just too busy and don't have time, and then you're a little annoyed, you feel like you feel like you kind of got this limbo situation. So I think, like, if all you were doing was just tracking how much money I made in steers versus how much money I made in heifers, you'd be off to a great start. And I think, like, the biggest mistake people make, and this is probably true of anything, is biting off too much before they're ready. I think, like, the nice thing about tracking is like, it's a skill that you can grow over time, right? So you can start with A and B, and then you can feel really good about it and split it into 1, 2, and 3 versus 4, 5, and 6. And like, there's nothing wrong with progressing and thinking about it as like it's like a lifelong thing, right? It's and then you can get better about tracking other things, and there is no need to boil the ocean. And as long as you're sort of like building a habit, I could throw out a million cliches about why I think it's it's like a philosophical journey, right? Like you gotta think about it at a personal level, not just at a purely logical level.
Are there some things that you find easier to track that could get people started? Like, hey, at a bare minimum, here's something that you can track throughout the year and year over year, and then maybe next year or 2 years down the road, when you've been consistent at that for a couple of years, we're going to add this tracking in. Or do you think about it in a hierarchical way that way at all?
Yeah, I mean, I definitely think there's some low hanging fruit. I think like for people that are really coming from square zero, like let's get those personal expenses out of here, and let's treat all the personal stuff like a piece of the business, right? And let's segment, and let's have a very clear line of like what was directly business expense and what was not business expense. And like some of that happens in the wash with the tax accountant, but like you could it's like just it's like giving somebody an allowance, right? You're kind of like fine, you're getting your first taste of budgeting. So I think that's a really straightforward one. Then I actually think the other one that gets people going is tracking inventory. And so, I I have a whole thing about like why I think inventory is critical to financial management and accounting, and like gives you the truest sense of the world. But like if you even just went through the exercise of saying, how many bales of hay did I have? How many did I end up with? Where did they go? High level, like you'll get some benefit out of that. Like you'll be able to plan for next year and make a call about if you want to stock up when prices are low. That's so like I always think that like the right place to start is data that you're going to use, right? Like do stuff that fits into your world. Don't bend over backward just to create data entry for yourself. And then, if it feels good, you'll start to sort of be able to integrate that in with your, the rest of your systems, and kind of work from there. But definitely like owning that personal expense side of the thing, and like thinking about yourself as a business in that way can kind of create an example of complexity that doesn't feel overwhelming. And then just like really owning those inventory numbers, because that'll help you no matter what.
Mm-hmm. Yeah, well, I'm all for hearing the pitch on inventory if you wanna make that.
Yeah, no, I have a big pitch on inventory, and I have an equal pitch on production. I think like with cattle, as you're very sympathetic to sort of regenerative as a notion, right? And like I have a coworker, and her family ranches out in Montana, and went through a whole, hopefully she doesn't mind me telling this story, but it's a good story, which is like they went through a regenerative process on their land and like improved the quality of it. And like the metric that they ended up landing on was, I think it was like antlers, like antler density, right? Like, do I feel like the regenerative work on my land has generated more wildlife as evidenced by antlers, right? And it's like, you can do the same thing with stocking rates. You're like, was I able to sustain 50% more cows, produce 50% more calves on the same acreage? And so that's like inventory in the form of production. But then like, and you'll be making more money for sure, but then you just have a clear number. It's like that number went up and I can see what's going on.
Mm-hmm. Yeah, for sure. Appreciate that. So, you mentioned earlier overheads, and this is kind of like one of the intramural squabbles within ranch economics. Is when do you call it an overhead, and what is a direct cost? How do you separate those two things out? And then how do we allocate overheads? Do we allocate them per enterprise, or do we allocate them, to the whole ranch? So how do you think about that?
Yeah.
I want you to take a side in this fight. No.
No, I mean, I standing on the shoulders of giants, like my basic thing, like the school of thought that I was initially exposed to and that I kind of stand by is like, if it's going to be a direct cost, it better be like real direct. Like that better be feed that went directly to a cow. That better be a vet expense, or that's going to be like mineral supplements, or like maybe if you want to talk about like the insurance costs, if you have livestock protection insurance or something, right? Like take all those. And then everything else is, you can start off as, I don't know if you can tell me if you've heard of this before, but so like we talked about profit centers as a concept. The other concept is the support center, which is basically like a generalized way of talking about overheads. And the 4 support centers that I've been exposed to are interest, depreciation. I think depreciation's in the interest one, but at the very least it's interest, management and labor, machinery and equipment, and then everything else. And so everything else, that's clear. The other ones, machinery and labor, management and interest, capture, like especially the machinery and labor one. That one gets a lot of action. But the way that I was sort of taught about this is bucket everything into those. And then at the very least, you've created another benchmark for yourself. You can say, what was machinery expense as a percentage of income, right? And that creates a benchmark. And then you actually run an allocation process for each support center. And so the idea is that, like, instead of taking all the world of overheads and needing to allocate everything, like, let's try to find some 4 big buckets that we think are universal. And this is from the A&M school, right? So I'm assuming they did some research and I'm basically just parroting somebody else's take, but like those are distinct enough where you can come up with some unique allocations. And you have to do four allocations, right? Where did my management time go? What was I paying interest on? What did I use my equipment for? And then spread those up. So I think my general stance is, if it's not a direct cost, like stick it in this other bucket and then only make the allocation once, as opposed to like every single day I need to be like, oh man, like how do I split this one car lease based, out across all my different enterprises, and sort of like keeping it as a reconciliation concept. And then like there's sort of the standardized performance analysis, which is just like a way that, you can then compare yourself to another operator independent of size and like break things into ratios. So that's where I stand on that.
I think that would be in line with much of this audience. So appreciate that. And I think it's helpful thinking about, the overheads and tracking them and figuring out, is this something that we can live without? Is this an overhead that we can live without? Because once we start to see that a lot of these businesses are going to be tend to be heavy on the overhead side. Is that true in your experience?
Yeah, I mean, it's one of the beauties of running your own business, right? Is like you're kind of running your business because you want to live with these things, and so it's like, yeah, I could live without it, but what am I working for? and then it's like, also I run a small business, and now I get to deduct this thing that's in my life as part of my business, and so but I think it is a useful a useful way to think about overheads. Is like they are probably more removable than the direct expenses, and I think like that is one of the nice things. It's like you probably, I mean, and this is, where the benefits of like just having a computer program to do it for you is like you want to filter up and down, right? It's like I want to look at machinery and know what machinery was as a percent of total. But then I also want to look into machinery a lot closer and be like, what was the biggest thing of machinery? And then it's like, oh man, like I spent $17,000 on my pickup truck. Like maybe I should buy a new pickup truck. So there's like, you're kind of constantly filtering up and down, and like finding places to look at a different time. But I do think the general notion of like, if you're looking to cut costs, at least you have a place to start.
Yeah.
Is a helpful one.
Yeah, for sure. Can you give me an example of each of those filtering up and filtering down? I mean, you kind of alluded to it there, but can you just give me an example of each?
Yeah, I mean, I think with the interest, I actually think it's a little bit harder because, like, I mean, I guess which loan am I paying the most interest on? And so, like, maybe a little impractical unless you have an opportunity to refinance. But like, yeah, so the interest one's one thing. I think like the labor one is sort of, you have labor, maybe you're paying out for day labor pretty often, and you sort of figure out that I'm paying Peter too much money at a high level. It's like, why was my labor expense so high? And then you want to filter to like, who am I paying so much money? And then like maybe somebody's been double cashing checks and you didn't even know at a high level, right? I think there's probably something around like at what point of labor do you actually want to convert to a piece of equipment, right? Where you're like, so if you were bucketing your labor by activity, and you were just spending a lot of time like herding cattle, like maybe it's time to get an electric fence or something like that, right? And so that kind of covers on that side. The machinery one, yeah, I think the machinery one is just a funny one because that's where you're gonna. That's just kind of like there's a lot of emotional utility that gets wrapped up in that one. And then these aren't like quite the levels of specificity, but they're just so personal. I think is the thing that you'll find out. And like the nice thing about the support centers is like, you know, you just meet somebody that's been doing their books for 30 years and maybe they were using some old software product, and like there's like you end up with this sprawl where you've just created like you're like this is the Norton security expense that you use like one time, or you're like this is like I want to differentiate between oils and axles, and you're like no, like you actually just spent a lot of money on your car type of a deal. And so yeah.
So we've talked a lot about tracking, you know, but how? How do
Yeah.
we go about tracking? What are some of the systems that you've found to be effective for tracking a lot of these things?
Yeah, I mean, I think it depends where you're coming from in a lot of cases. I mean, admittedly, like talking my own book, like I work for a software company. A lot of people track things with receipts, throw them in a shoebox, give them to somebody, pay somebody gosh knows how much per hour to read my receipts and tell me what they're for. Like you probably have a phone, you can probably snap a picture of that receipt, and you know, computers can probably tell you what that receipt was for and might even be able to tell you what tax category it belongs in. Like so I think, you know, the tools are there, and just like taking advantage of some of that stuff is definitely step number one. I think there's also sort of this notion of like, I don't know. I think that you find it less on the invoicing side, but like the idea of like making a bill just as a sort of principle, like some people think of bills as like the way that I can figure out like when I owe somebody on net 15 or whatever, right? But also it's a great style of paper where you can say I bought this many bales for this much price. And like it can be worth it to just create records that like start to contribute to inventory, right? Like to me, all things come back to just like having like quantifying things not only in dollars but in units of stuff, like gallons of gas, bales of hay, right? And I think that again, like somebody probably sends you a bill, it's the same thing as a receipt, and just getting those into a place is one way I think about it. And I think that the related thing is like having a schedule, right? And so like what you don't need to do is sort of every single day I'm going to block off an hour to like track all my expenses. That might not be for you. But if I was going to do it at least once a month, and you know, I had like my Sunday coffee, do my books, get it out of the way, like I think there's like a ritualistic element that I think actually makes tracking a lot more feasible, the same way like cleaning your house, right? And so I think that contributes a lot to it. And like, yeah, I think for folks coming off pen and paper, maybe they don't know is that a lot of banks do have this like automatic syncing capability, right? So it's like, yeah, you could write everything in your check register and then transcribe your check register onto a spreadsheet and then look up what everything was for later. Or like you should consider signing up for, depending on how many hours you're spending, you should consider signing up for a service that does that for you and like actually makes you spend more time thinking critically about your business and taking the data entry out of it, right? So the way that we talk about it is like you either want to do your books in context, right? Like make a bill, put the details on the bill, you'll figure it out later, or reduce data entry and get to a point where you're spending more time like thinking critically, reviewing the books, planning for the future and things like that.
Yeah, I think that's huge. Is freeing yourself up to do something that is valuable that makes a difference for the business, where you're not just taking time to, check this thing off the to-do list. You're actually getting information or data. You're getting information back, and I think the difference, just to illustrate it quickly, the difference between data and information is data is if you just have the letters FTSA, that's data. But if you rearrange them and you put it as FAST, it's fast, all the same stuff's there, but now it's information because it's recognizable. It's something that it's useful to me. It means something to me. It communicates an idea or a truth, if you will.
Yeah.
And now we know, okay, this is what these numbers are telling me. This is the information, right?
Yeah, it's a great example.
I mean, the systems then, if I'm understanding you correctly, would be, signing up for one of these services that has some of that tracking built into it. Is that right?
Yeah, I mean, I think like that's definitely, I think, step one. And like, you're not committing to it for everything. Like, you probably have a checking account and a credit card, right? And you can mix and match. And like, some folks just really like want to enter their check transactions in, right? And so I think you're not shoehorned, but the automatic syncing, like, I don't know, sometimes I think it's maybe a symptom of my age, where I'm just like, everyone knows about this, right? But it's a thing. It's available, just in case you don't know. It's an option for you. And then I think the thing that I've seen is actually the receipt storage has been incredibly impactful because of the fact that you're doing it anyways. And it's just like that, the visual of the glove box in the car just being stuffed with paper, like, somebody's going to have to take those out and look at them. It might as well be you with your phone, right? Like, that is sort of, I think, universally a good tool that people should be taking advantage of.
Right. Okay. So, would you say it's ever worth creating an invoice when a class of livestock goes from one class to another? So she walks out of the chute. Now she's a bred heifer. She was up to that point, she was a replacement heifer. Now she's a bred heifer. She's going to go into the cow herd. Right. So is it ever worth creating an invoice within the business to track that, or is there better ways to do it, do you think?
No, I mean, I think, we in our program, we have this notion of an internal transfer, which is the same concept. And like, I think if you get philosophical about it, like, an invoice is just a journal entry with a fancy name and a bunch of things going on, right? So it's like, on your books, you should record an entry that, and that, that the value on your books changed, and the offset is increase in the inventory account, income in the inventory value, income account, right? And so an invoice is a totally fine way to do that. And that's where, like, if you are using software that helps you track things by enterprise, you can say, actually, this is income to heifer development and expense to like the finished cattle enterprise, right? And so, like, I think the reason to sort of extrapolate out, like, yes, you should do that. And the reason you should do that is that it is an example of where, if you are doing enterprise level accounting, that is kind of money received in a non-cash way to the heifer development into the finished cattle, or like the next year's cow-calf crop or whatever.
Yeah, it's value creation, right? It's kind of the other side of that cash flow versus economic profit thing that we were talking about earlier, where, you might be cash flow positive, but going backwards economically, or vice versa. But knowing that fair market value, my cow enterprise paid my cow-calf enterprise bought these heifers at fair market value and we're still profitable. I mean, that's the ultimate win, right?
Totally. Yeah. No, it's like, that's like it's an example that, you tell somebody that and they're sort of just like, oh, well, if I don't use my balance sheet, sort of, what's the point? And you should only do it if you're interested in understanding your enterprise analytics, right? Like you should and I'm not trying to make busy work for folks, but like if you are interested in understanding your enterprise analytics, then you must do that type of stuff.
Can you share an example of how this has really made an impact in somebody's business? The tracking, I'm sure, worked with many ranches with your work at Ambrook. Can you share an example that comes to mind?
Yeah, I definitely can. I think that maybe the most prescient example is actually an operation that we work with that does trucking as well. So they started out sort of doing a bunch doing a bunch of different things, some row crops, some custom feed, some cow calf, all these things. And they ran a trucking business, right? Or they didn't. They were just farming at first, and then they're like, hey, we should stand up a trucking business because we're spending a lot of money on hauling, and there's other people in our area, and then all these things. And so they went through that cycle, haul stuff, do all these things, and we were working them for like a couple of years, and actually fairly recently they were explaining to us that they are shutting down the trucking business. And the reason is because, when it comes to the insurance and the repairs and maintenance on the trucks, like they were not actually turning as much of a profit as they thought, and it was actually the time in a poor Peterbilt's life cycle when you might need to buy a new one. And like that was the question is, we have some data. We did this thing, like you could talk yourself into why it's a good idea all day, right? Like we don't want to pay somebody else to drive our stuff. We should drive our own stuff. And you're like, oh shoot. But like then if I actually buy a new asset, I can look at what the returns were. And like then you add in the sort of non-cash headache factor. And they ended up rolling it back and doubling down on the direct to consumer side, right? Like let's haul less and focus more on this other operation. And so they have a lot going on. And I think just like being able to bucket things out and say like, no, but if we just look at this, like let's improve this without the noise of everything else. And just like made a very clear cut decision. And it's not like an impossible decision to make without, but it's a big decision, right? It's got a lot of impact and a lot of things at stake. And so, you want to feel secure doing that type of thing.
Yeah, hat tip to Dallas Mount, who got himself in trouble a few years ago writing a blog post on the ranchmanagement.com, a ranching for profit website, about how you're probably not profitable in your trucking business or your trucking enterprise, and you should probably sell your truck and hire somebody else to do it. And I think it goes back to something that you said, and actually something that Burke Teichert said on last week's episode, that these equipment decisions get pretty emotional. Cowboys don't like to talk about emotions, but that is a fairly emotional thing. Like, I really like that truck, or I really like that Kubota skid steer, or I really like, X, Y, Z piece of heavy metal, and it can be kind of hard to think about, well, what would I have added to the bottom line? Just full disclosure, this year, our operation was cash flow positive until you figured in the metal.
Yeah.
Until you figured in the payments on the metal. Now there's a whole host of other reasons why we have those pieces of equipment, but it was kind of funny just watching that. Oh, drop that in there. No longer positive.
Yeah, totally.
So,
I took economics in school, and like, my time in the working world has basically just been like a series of moments of being like, oh, that thing that I learned about, like, that's what it means. Like depreciation, like why, like what's the point? Oh, because otherwise I wouldn't like actually know how much, I spent this 10 years ago, out of sight, out of mind. But no, if I actually spread it, I start to see the impact of these things. And so, always learning.
Yeah, for sure. That's a good concrete example, and I appreciate it. There are some things that we make some changes that we make on our operation that tend to be a little bit more ethereal or harder to measure. How do you, or how have you seen, or can it be done to effectively measure the financial impact of making a regenerative change in the business?
Yeah, I mean, I think that like there's some obvious answers, like is my like if let's say you take the time to create your accrual basis situation and you've managed all the different bumps and ebbs of cash flow, like at a basic level, am I making more money at a more efficient rate after having implemented these practices? Like that's fine, but it requires you doing the accrual accounting correctly. And so, there's that. There's the sort of antler example we were talking about before was like, can I find a metric, whether it's financial or not, that can speak to, that is like indicative that I'm making more money. Like if I have more antlers, I'm probably able to make more money from hunting licenses. At a simple example, right? So those are two things that come to mind. And then I think like I was actually trying to dig this up before we got on, and maybe if I can find the link later, I could sort of send it back your way, and you could put it in the notes if that's what
Yep.
people do. But
that's what you do.
there's this outfit. I think they're based in Montana, and they do a ton of land purchasing, and it's like land management for regenerative purposes. And I don't know if they made it up or not, but this notion of like a biological balance sheet or like a land balance sheet, and it is like a set of non-financial measures, but you treat it as like your land has assets. Like, is it drought resilient? It has liabilities, like are there pests? And then it sort of, nets out an equity, and, maybe you're not getting an appraisal every day, right? But like, especially with land, like, there are non-financial qualities to your lands that do translate to financials, like in the fullness of time, right? And like, they're knowable, and you can sort of like, if your land's getting healthier. Like if you've ever been somebody that's worked on lands that has been like unhealthy and seen a transformation, there are signals that you can be using that hopefully all translate to more productivity on a year-to-year basis, but definitely translate to more value on a sort of like equity basis. And so keeping an eye out for those, and like it's the same thing, like measure what matters, right? Like pick something, measure it, manage towards it. Like maybe it's like acreage of water coverage, right? Like size of well, whatever it may be. Like there's and yeah, those will come back in financials.
Yeah. I mean, you work with Ambrook. We've alluded to it a couple of times here. Talk to me about the onboarding process with Ambrook and some of the steps that people go through, and some of the things that are useful for them to kind of have in place, preparing for that.
Yeah, I mean, I think that honestly, like most of the stuff that we talked about, like even the shape of the conversation today, like is essentially this could have been an onboarding call, but not like, it's like, what do you do? What are your side hustles? Like, what matters to you essentially? Like you can kind of, it's consultative in nature, right? Like, what do you not like about where you're at today? Like, what do you want to change? Most people come, it's like buying a new truck. Most people come to a company like ours because there's a reason, right? Like there's something they're trying to do differently. And so like, I think, prioritizing that is sort of job number one. And then it's thinking a lot about these systems, like this conversation about like, all right, like, do you think you're going to sit down and tell me about the 23 heifers versus the 24 heifers? If yes, great. If no, also great. Here's one level of abstraction up. Like happy to talk you through that, right? And so there's a lot of just like making the system set up in a way to be like aligned with your outcomes is most of our job. Cause like something I said, like accounting is like physics. Maybe not, but like there's rules. This is the way the world works. Everything has to match. Great. How do we mold the system to do what you're trying to do? So that's most of what our onboarding is about. And then the other portion is just like getting you on, like, we have a mobile app. You should use it. This is what you're going to use to get your receipts uploaded. Let's get your bank account synced up and figure out how much time we're going to save you. Let's set you up with some automations. Like we have AI that can sort of like, when I see, 76 in the description, gas, pretty straightforward, right? Things like that. And yeah, so I like that's like I'm trying to think if there's anything else about the system that I missed. I mean, like, there's different other parts, like if you're coming from previous systems, like getting your balance sheet set up, maybe like finding the skeletons in wherever you're coming from and trying to proactively like get those balances fixed up, or like that pesky 2015 tractor loan that has never disappeared from the balance sheet for some reason, like helping you resolve that type of thing.
Yeah. Well, it sounds like, Ambrook was built for agriculturalists, farmers, ranchers. Kind of depends on what side of the 100th meridian you're on, actually. But I was told the other day, due to the Spanish influence in California, that you can actually have an orange ranch in California.
Okay.
No livestock, but it's a ranch because we're here in California, where all of the ranch, that's all where that word comes from. So, anyways, but it's built. Not only is it built for farmers and ranchers, you have that consultation at the beginning and build it for the individual operation too. Like, hey, we are going to track 23 versus 24. Yeah. Or no, we're not. We're just going to track heifers versus steers, or whatever. So that's cool. That's good to hear.
And and it's one of those things. It's like there are a number of very high quality. What we don't do is we don't do your books, right? Like, that's not, we're not over promising that. It is a tool. It is a tool in the tool belt, right? And like, we have a number of folks on the platform that are specialists, right? And work with clients. And like, maybe you're not going to track 23, 24 heifers, but maybe the person that you trust to help you plan your operation is, right? And so like, and maybe you hadn't even thought about it, and talking during your onboarding, the wheels got turning and you were like, well, maybe that's something I should think about. Right. And so it is definitely meant to be like, it is as powerful or as not powerful as you want it to be in that way. And so, and then has some Schedule F customizations as well, and sort of like Schedule C if folks do that kind of a thing for tax reporting purposes. But yeah.
So Ambrook collects the data, RanchRight helps you analyze it. Simple as that.
yeah, that works. It's a happy setup.
Very good. Well, I appreciate your time today. Thank you for joining me.
Yeah, likewise. It's great to meet you.
Very good stuff there with Eric. Really appreciate his outsider's perspective, maybe, but it's helpful sometimes for those people with fresh eyes to look at our businesses and to provide some context and some different way of looking at things. Very excited to welcome back to the podcast next Dr. Alan Williams, and we're going to talk to him about successful grass finishing. What are the genetics and the epigenetics, the management, and some of those things that go into us being able to succeed at this and finish a high-quality, well-marbled, tender, flavorful, all those things that people are looking for. So we're going to talk to him about all that and more on the next episode of the Working Cows podcast. We'll see you then.
We invite you to visit workingcows.net to subscribe to the show via iTunes or Stitcher. You'll also find detailed show notes pages, resources from our guests, and the industry leaders who have influenced them. For more ideas on putting your cows to work for you in a more profitable way, tune in next week.